TIPS market is very downward sloping. So like the last inflation print was 8.6 in realized terms, but the 10-year break even, which is the measure of CPI inflation, is 2.62 right now. So 2.6, it's under 275. So it's much lower than where realized inflation is. And then what we do with IVOL is we try to take that core TIPS portfolio and give another measure of inflation outside of the CPI index, because the problem, the CPI index, a third of it is what they call shelter, and shelter is actually owner occupied rent. So it's just not it's not what the Fed uses. Actually, they tend to look at PCE and other indices, but it's just not the only way to measure inflation. I think the best comparison is using equity indices. There are actually more ETFs than stocks, right? There's so many ETFs, and measuring corporate America, nobody would ever measure the stock market with one index. Why would you do that with something as big and harder to measure like inflation?